Welcome everyone to session 3, which is the third session of APEC fostering greater SME participation in global value chains. Today's session is going to focus on getting contracts right and accessing finance. And I wish to begin today by acknowledging the traditional owners of our land. So I'm actually based in Sydney. So I'd like to acknowledge the Gadigal people, traditional custodians of the Eora Nation, and pay my respects to their elders past and present, and I extend that respect to Aboriginal and Torres Strait Islanders peoples here today. In today's session, we will seek to understand what goes into supplier agreements and what SMEs need to watch out for when getting into contracts, and as well as financial products and sources that SMEs can access and how to reduce costs from cross-border payments. And lastly, we'll go into whether innovations by fintechs could actually benefit SMEs and what governments can do to promote fintechs. I'd now like to hand over to today's moderator, Mr. Arnold Jorge, who is the CEO of the Export Council of Australia. Over to you, Arnold.
Thanks, Angela. The format today will be in two parts. Firstly, our panelists will each make a brief opening statement, 5 minutes tops for each. And that's a reminder for our speakers. So please keep your remarks as concise as possible, please. Then we will have our panel discussion or Q&A. I will pose questions to our panelists to seek their insights. Our panelists comprise, and I'll just go through their names. I won't actually go through any major introductions. Otherwise, we'll end up eating too much in our time for discussion. So Mr. Thye Ho Hong, member of the Board of Supervisors, Viet Credit Finance Company. Mr. Chin Thye Choo, principal of CTCHOO Capital Advisors. Mr. Alan Fung, co-founder of Finkey, Capital. Ms. Xiaokai Lin, regional head Open Account Trade, Standard Chartered. Mr. Peter Smith, managing director of Burra Asset Management. Mr. Stu Hollows, Chief Risk Officer of Paytron, and Mr. Jirayut or Topp Srupsrisopa, founder and CEO of Bitkub. Before we begin, I would like to recognize the number of APEC officials that have joined us today. So glad you can join us. So speakers, let's be sure to be as informative as possible. Sorry to put that extra pressure on you. All right, now I would like to invite our panelists to make a brief opening statement. Just your opening statement, please. When I call on you, please make sure you introduce yourselves and describe your business as part of your opening statement. So let's begin with Thye from Viet Credit Finance Company, please.
Hello, everyone.
Go ahead, I can hear you.
All right, hi. I am Thye. I work for Viet Credit. I'm the member of supervisory board, and I supervising the internal audit and control in the company. And Viet Credit is one of the largest consumer finance institution in Vietnam. So in the implementation of fintech, I think it is just popular on consumer level. It is not yet very popular in the company level, on company level. So there's a lot of ground for development in the field of finance for the company and applying the new technologies, payment technologies for the company. And nowadays, most of the companies that I work with, and I have discussion with them, they use LC, right? They use LC and other traditional form of payment rather than using fintech for paying the partners. So there's a lot of challenges and difficulties in applying fintech in cross-border payment, and not just on domestic payment already face some difficulties, not just international and cross-border payment. So I hope that in the near future we will develop some sort of a scheme and legal framework and technologies that can help SMEs to make payment to foreign partners because there's a big difficulties when there's some trust issues. When it comes to payment, there's some trust issues when we work with some partners in some economies, and if we can develop some sort of technologies and legal framework that helps the SME to find and to find reliable partners, it would be very, very useful for the SMEs. That is some of my ideas on the fintech.
Thanks, Thye. I just wanted to clarify there. LC is letters of credit. I just wanted to make sure for those who may not be familiar with it.
Yeah.
Thanks, Thye. Okay, I might just go quickly and ask CT from CTCHOO Capital Advisors to also just make a brief opening statement.
Hi, good morning, everyone. Well, we basically are a business consulting firm based in Malaysia, although we have some regional footprint when occasion calls for it. And we do focus mostly on SMEs and consulting on funding and financing solutions and branding strategies where required, and generally trying to streamline, modernize SMEs who are trying to become more competitive. So where it involves inbound entities, we can facilitate joint ventures. We have also assisted on and advised on distributorships where supply chain is extremely important, and franchise operations, both Malaysian ones going outbound as well as those coming into Malaysia. Thank you, Arnold.
Thanks for that, CT. Alan from Finkey Capital.
Thank you, Arnold. This is Alan Fung. I'm the co-founder of Finkey. Finkey is a startup. We aim to accelerate the adoption of sustainable home and business renovations. Our goal is to offer easy, flexible, and transparent ways for homeowners and business owners to reduce energy bills and also lower carbon emission. It's an early stage of development, and at the moment we're partnering with renovation companies, tradies in Australia, family office for the funding, credit agencies, and software development companies. We're also looking for partners in the region as well. My other business is management consultancy, and similar to CT, we help companies in market entry and expansion. We find distributors, reseller, referrers, investors, accountant, tax agents, etc., for our clients to succeed in the domestic economy. We serve a broad range of clients, from global companies to startup companies looking to enter Australia. Some recent clients that we work with are the robotics company, sustainability, AIoT, AI, Internet of Things, real estate company, food and beverages. For companies that are from Australia looking to expand overseas, we work with a lot of technology startups, especially in the software side, software as a service. And we work with health supplements companies, beauty, pet food, and media and entertainment. These are some of the cross-border clients that we're working with at the moment.
Thanks, Alan. XK from Standard Chartered.
Hi, thank you. It's good to see all of you online via the Zoom. Thanks for inviting me. My name is Xiaokai. I'm from Standard Chartered. I head up the regional open account team in ASEAN for trade and working capital. So I think Standard Chartered, as an international bank, we do have extensive and local experience to support our clients across for their cross-border needs. We do have various products and solutions that could help meet corporates, big corporates, and also SMEs in their businesses to help to expand their cross-border and even internationally up to the global supply chain. We do offer financial services like FX, trade and cash management solutions, including digital finance or financial service markets in the region. What we usually do to help the mid corporates and also SME to gain insight or to expand their business, if they want to move into a new region, is to look into the foreign regulatory and the business environments. We help to facilitate meetings with the potential business partners and also help to speed up the success into their expansion to the various markets. Thank you.
Thanks so much for that. Peter Smith from Burra Asset Management.
Thank you, Arnold. Yeah, Peter here from Burra Asset Management. We're part of the Australian economy. Firstly, thank you for inviting us to have a chat today. Really appreciate that, Arnold and Angela, and the rest of the crew here. Look, Burra's, it was born out of, again, an Indigenous Australian focus. We've now, and probably in the last few months now, stepped even further to being Indigenous globally. We're making connections with a number of different Indigenous groups around the different economies of the globe. We are a startup in effect, but at the same time, we've expressed that pretty quickly to a small to medium SME. We, again, specifically focus on as a consultants, if you like, is probably the best term to use, for Indigenous groups, stakeholder groups that are wanting to, I guess, grow and be self-sufficient economies in themselves. We do a range of different things, but we're now working on a project where it's a technology-based project in regards to carbon trading. At the same time, so yeah, hearing a little bit from Finkey, we're very interested to maybe have a chat in regards to software, but what we're also doing is enabling Indigenous, starting in Australia first, but enabling these Indigenous stakeholder groups, i.e. Aboriginal corporations, as they're known as, ACs, and Aboriginal ALCs, Aboriginal Land Councils, to use their funding that they are receiving in regards to being able to fund. So I know our topic today is around funding and contracts, but we're working with 3 specific groups at the moment whereby they are doing their own funding and having an offer, a line of credit, if you like, for other Aboriginal groups within Australia, and now slowly moving to the mainstream outside of Aboriginal groups in the Australian economy to fund them and their projects across borders. So yeah, it's exciting times for us. Again, we're a pure asset management company with the slant on technology as well. So thank you.
Thank you, Peter. It's Choo Hollows from Paytron, please.
Yep, thanks, Arnold, and good morning, everybody. Thanks for having me on. So Paytron is a fintech. We've been up and running for just shy of 2 years, but really trading since June of last year when we got our Australian Financial Services license. It's been a pretty strong start for the business. We're essentially a global payments and accounting enablement platform. We simplify the way that businesses manage transactions from start to finish, and all in one place. The idea is to provide a complete cash flow visibility and allow people to manage companies to manage their currency exposure, which is clearly a topical issue given today's volatility. We support a variety of client types, from SMEs to medium-sized corporates, involved in domestic and international trade, right across the manufacturer, the exporter, the importer, and the retailer perspective. Our niche value prop really is real-time integration with SME accounting platforms such as Xero, and we're just about to bring on NetSuite as well. This allows the client's accountants or bookkeepers, who often use disparate applications and insecure bank files for paying bills, to interact with one platform covering invoicing, supplier payments, trade receivables, expenses, payroll, and reconciliations for their clients, as well as set approval models that allow the client to maintain control at all times. This helps to minimize the time and resource overhead for both the accountant and the clients themselves. Baked into that, we offer multi-currency business accounts to collect, hold, and send funds in up to 37 currencies. We provide local in-country accounts in Australia, UK, US, EU, and soon to be New Zealand. And we make use of local payment rails across a number of currencies and SWIFT where we can't, to around 130 destinations as a whole. We make sure we have transparent and competitive FX costs to help with that. And we provide expense management using our own credit card product, plus OCR invoice capture. So really is trying to become a bit of an ecosystem for SMEs and those that are sort of growing into potentially international trade through their evolution. At the moment, the reach is very much driven by the global nature of the businesses we engage with, many being importers, but we are growing the exporter base at the moment. We've also seen a number of clients reaching out to us in Australia to support their businesses located overseas, given the ability to hold and send funds in their local currencies. Listening to the market really has allowed us to identify where in the global trade cycle we can add value over the evolution of the product. As it turns out, pretty much everywhere. So, we'll be opening shortly in New Zealand to New Zealand-based clients, with the UK to follow soon after, where we've actually received great support from Austrade, ASIC in Australia, and their reciprocal resources in the FCA, the UK regulator, in developing plans for that location. Over time, we see expansion of the global reach further across APEC and North America. And really what we want to see is that to allow us to start supporting both ends of the supply chain, potentially providing benefit for payers and receivers of the same transaction.
Great, thank you, Stu. Topp from Bitkub.
Hello, everyone. My name is Topp from Bitkub. Thank you for inviting me to join the panel discussion today, and a pleasure to meet you all. So Bitkub is the largest fintech company from Thailand. What we do is that we are pretty much a blockchain and digital assets ecosystem, which controls around 95 to 99% market share in the country at the moment. Bitkub has been around for 5 years, and now we have 2,000 employees. And our last year's revenue, we hit $200 million in revenue and $100 million in net profit. So Bitkub is the most profitable startup in the country up to date. Our investment thesis or belief, is that we believe that in the next decade, the investment destination would be very different from today's situation. Currently, most of the investments or the most preferred destinations for investment would be the US, and then China, and then India, and Europe, and then in the Southeast Asian region or the Asia Pacific region is a distant mile in terms of attracting investments. But we personally believe, we believe that in the next 10 years, we will be entering our golden era as a region. We are rich in natural resource. We have younger generation of workforce. We're not entering the aging economy yet. We are, an area with stability and peace. So we believe that we're going to be attracting a lot of investment in the next 10 years. So what do we need to prepare for SMEs today, right? So we need to talk about three things. First is sustainability. Second is supply chain, the change of value chain or supply chain. And the third is digital economy, right? So working backwards now, if we need to solve these three things for SMEs, what do we provide, or what services do we provide? We have 9 companies under our holding group now, but let me share with you 4 companies that are related to this discussion. The first company is called what we call the Digital Asset Exchange, the very first fully licensed digital asset exchange, which controls pretty much 95% of the volume in the country, right? So what does this help with the SMEs? First of all, as a region, we need free flow of payments. We need a more bonding one region. We need free flow of goods and services. With the current issues, the goods and services are not fully free flow. Every country would have their own local regulations to move goods and services around, which is harder for SMEs to sell goods and services online. And second pain point for SMEs is payments. So with Bitkub, we're the biggest fintech in this space where we are providing infrastructure for the future, where SMEs can do remittance. For example, today, a Thai common man customers can send money from Thailand to the UK within 30 seconds, compared to a traditional banking services where in Thailand, you would have to wait 2 days right now to get money across. And you would normally lose 5% of the transaction fee. For us, we only charge 0.05%, 10 times cheaper, and the money would arrive within 30 seconds. So we allow free flow of payments, right? In short, we need to talk about three things, right? Sustainability, the change of value chain, and digital economy. So we would summarize, we need to, what do we need as a region? We need a green supply chain. We need a green digital supply chain. We can do more with less by bringing in digital technology, right? So with the exchange itself, apart from remittance, we believe that everything that can be tokenized will be tokenized or digitized in the next 10 years, including carbon credit trading, including electricity trading. Since we already have a platform with enough liquidity, we can tokenize carbon credit and trade globally as a region, and also electricity, where every household can produce electricity by themselves now. So we are preparing the infrastructure for this, including currency. We don't believe that currencies will be paper-based in the future. Digital economy is going to be the biggest economy in the next 10 years. China, nominal GDP is already exceeding those of the US, and now 40% of the China's GDP comes from digital economy. With Ukraine, 30% of IT economy, accounts for 30% of their GDP already. So we believe that the digital economy is going to be one of the biggest economies in our region. So we believe that even currency would be tokenized. And within Thailand, we are testing digital baht as we speak. In China, we have digital yuan. So we need a new banking infrastructure, right? So we are preparing for the future, as a digital critical country's critical digital infrastructure. And the second company is called Bitkub Blockchain Technology, where we are the largest, blockchain native, blockchain de facto winner for the country, where most of the developers build, the apps on this infrastructure. So, with this arrival of smart contracts, we can pretty much automate everything, right? Including invoices, supply chain, letter of credits, letter of guarantees. So we're preparing the infrastructure for the future. Right? So we have, NFTs, marketplace. We have Bitkub Next, token wallet as a service. Because we believe that everything would be tokenized, and we need to humanize all the point system, including carbon credit, electricity points. So we need to prepare the right infrastructure. And the third company is called Bitkub Academy. We believe that we need to train the right human capital to capture the growth in the next 10 years in our region. We need to reskill and upskill our workforce to make sure that we can work in a more sustainable manner. We need to provide green supply chain. There'll be a change of value chain, but we need to offer a green supply chain. Otherwise, we cannot attract investment into our region. So we need to start training the people. Apart from carbon credit trading, we also need the right way of working. We need less and less paper. We need more automation. We can do more with less by bringing in digital technology, more output, less input, more sustainable, green supply chain. So we need to train the right human capital, and to make sure that globalization is more fair, and everyone benefited more from globalization. So we're trying to make sure that education is more inclusive, not exclusive. And the way to make sure education is more inclusive or digital inclusion is to create an open education platform. Right now, education in Thailand is a closed system and only for the privileged group, because the marginal cost of production increases as we increase the output. But with the online platform, like what we're doing today, other than 50 people can listen and learn from this session, we can live this, broadcast this, and the whole country can learn. And my marginal cost of production is the same, 0. So we can scale education without increasing cost. And that is our belief, that we need an open education platform where content can come from anyone, anywhere, anytime, and people can get access freely. And government only needs to provide, connectivity for the citizens, as well as digital ID. These are the public goods that the government needs to provide. And all the education platform would be partnering with traditional education institution to deliver education in a new way. That's why we created Bitkub Academy. And the fourth company is called Bitkub Ventures, which is a CVC. So we reinvest our own profit, 100 million net profit last year in dollars in other startups in Thailand to build an ecosystem. Last year we invested about 10 million baht of investment. This year we invested 100 million baht of investment into other startups, and hopefully next year we can do $1 billion baht of investment into other startups by reinvesting our own profits. Thank you.
Thanks for that, Topp. You raised a number of interesting propositions already. Hopefully we can discuss them a little bit further in today's session. As we actually have a lot of financiers and tech experts on the panel, I'm actually getting a sense that there's a lot of concepts and terminologies that will be raised. I'm already taking quite a lot of notes here. So hopefully people are able to pick a lot of these things up. If you have any questions on any particular concept or terminologies, just please put them in the chat box, and hopefully somebody will be able to respond to it. So thank you very much, everyone, for those introductions. Let's now proceed to the actual panel discussion. So hopefully we can delve more deeply into some of the points that have already been raised. So having recently found out that Thye from Viet Credit has many roles and responsibilities, including being a retailer for Samsung Electronics, I would actually like to start with you, please. Your views would also help link the discussions that we had recently in Thailand as part of session 2. So my first question, and hopefully you can be able to address this just based on your current experience, is that as a small business yourself dealing with large multinationals, what has been the key challenges in working with large foreign companies? Please reflect also how other Vietnamese small businesses are responding.
So thank you, Arnold. The key challenge is that we are small, and our business is so much dependent on the bigger company, our clients. Our day-to-day business is very, very dependent on them, and the production plan is changing every day, and sometimes we do not get payment on time, and because we are small, we lack of cash flow, and the cash flow does not come in time. We do not have money to pay wages and materials input, and that is one of the biggest challenges, that we lack of short-term cash to pay for our inputs. And we try to solve it with borrowing money. As a small company, it is not easy because our credit rating is virtually 0. So we can't borrow money. So that is one of the biggest challenges, is a lack of short-term cash in order to cover for all the short-term expenses. And the second challenge is working for the big companies like Samsung, is that we would need to comply with a lot of quality control rules and regulations, and we will need to apply a lot of and we need to constantly improve our productivities, because we got a lot of pressures in because the price doesn't change. However, the inflation is high, so we need to constantly innovate our operations and our production process in order to reduce the cost and improve the productivities. And that is constant challenge. We need to think about it every day. Innovation is needed every day in order to reduce the cost. And that is one of the biggest challenge, because if you do not reduce the cost, we will not have enough money to run for the next month. Okay, so that is one of the biggest challenge. And another challenge is that the cost in nowadays keep increasing due to the high inflation rate. And especially in Vietnam, we face a challenge of transportation cost. Now it takes it's really a nightmare nowadays in our country to travel, so which increase the cost of our shipment significantly. So in order to deal with that, we move to we gather in an industrial zone. But however, the cost of the rent cost is significant. Even for newly established industrial zone, the cost of nearby land is really high due to the speculations. So transportation, land cost, rent cost is like a big challenge. And another challenge is that everybody think English is international language, but in our countries, English is not quite useful for production, because our main investors, foreign investors, are Chinese Taipei and Korean and Japanese. So they don't use English that much. Chinese, Korean and Japanese is more popular in production business. So and when I work with Korean and Japanese partners, I can't speak. We need interpreters. So which is also a big problems, and we can't understand, and we are dependent on the interpreter. So it is big problems. Another problem is that we need expertise. We need expertise because we're a small company. You don't know much about 5S, 3D, those terms very popular in production, and we need to do that in order to move up the food chain. However, we do not get much information from corporation, association or organization like Zyka or Koika or AUS8, in terms of small business. We do not get much information from that. And for Vietnamese association, it's virtually not very effective. It's the information come from them does not seems to be very useful. And the final thing that I would like to discuss is that the environment issue, right? The environment, the air quality and the water is like very bad, and it's contaminated. So in order to work with join the global value chain, we would need to improve the environment. We need to deal with environmental concern in order to improve the air quality and make it greener for the neighborhood. So I just want to sum up. So the first difficulty is that the short-term cash flow. The second one is transportation cost and land cost. The third one is like the language barriers, and the third one is like expertise, lack of expertise, and final one is environmental issues that we will need to deal with. Thank you.
Thanks very much for that. Hi. I just want to just quickly shift now to a little bit in terms of the financial products, because of your financial background. What kind of financial products tend to best suit the needs of Vietnamese SMEs, especially if they are seeking to grow through trade? You did allude earlier in the context of letters of credit still being a critical element of that. And again, are there expectations of SMEs applicants, are there expectations consistent with the actual financial products that are actually available, and including the terms and the cost of financing?
Okay, the most popular in Vietnam, the most popular method of payment is like money transfer. We use app. Right, on iPhone or on Android phones, we use app to transfer money from one party to another party. And if we do international or cross-border trading, first of all, we need to find reliable partners, and then we can use money transfer for them. Or if the partner is not, is questionable on some level, you will need to use LC. And when I work for Japanese bank, LC and LG and is the most popular method of cross-border payment. The fintech is not popular on firm level yet. It's for my company, for the company that I work for, which is Viet Credit. We have some fintech products like buy now, pay later. We can use like ID card information in order to provide direct loan to but the interest rate is quite high. However, it supports a lot of consumers in Vietnam. If they want to buy something and they have some short-term cash flow hanging in the next few weeks, and they can borrow money quickly and get the product that they want, and then they can pay for it later. So that is one of the. However, for companies and exporters, LC seems to be the most popular, and money transfer or bank acceptance maybe, but yeah, LC is the most popular one, I think, when I work with some international trader in Vietnam. And the next question would be the cost of money transfer domestically. Domestically, the cost is now very cheap. It's virtually nothing. The cost of domestic transfer is virtually nothing. But the cost of international transfer is quite high because unlike Thailand, someone in the group, maybe Topp, we talk about the money free flow in Thailand, but in Vietnam, no, because we see the problems of financial crisis in 1998, and because due to the lack of foreign currency control, we have financial crisis. So in Vietnam, they are very, very careful, and because the financial reserve, foreign currency reserves in Vietnam, gold reserve in Vietnam is not that much compared to Thailand. So they are very extremely careful in the capital control. Sorry, so they are very capital. They are very, very reluctant in letting the foreign currency flowing out of the countries. So that is why the cost is high, the procedures is long. It's impossible to take like 30 seconds, like Topp said, to transfer money from one country to another. So the time, the cost is really high, and that is one of the big issues. And when we receive money, because when we deal with international partners, we need to convert money back and forth. It's not easy to convert money back and forth to domestic currency to foreign currency. It's not easy because due to the strict foreign capital control of our government, and it is suitable. I think it's suitable for the current reserve level of our countries.
Great, thank you very much. Hi, can I go now to CT? We're kind of shifted a little bit here in terms of the focus. So my question is what are the key elements that go into contracts and agreements between buyers and sellers or in cross-border partnerships? I guess also if you could just expand on why are they particularly crucial?
Thanks, Arnold. I think basically two words, risk and cost. This is something that we always have to be careful about. In terms of risk, especially for first-time partners, with people that you're dealing with for the first time, you have to look at the description of the goods, and that's very important because description affects the potential disputes that may arise. So if goods are not described properly, and when it's landed and there's a dispute by the receiving party, that's usually where the grief starts. And the other aspect is if goods are not properly described, especially based on the World Customs tariff codes descriptions, it affects the cost of goods because the import duties may apply to certain things. There's a classic case about how rubber hoses that were used, imported from Japan, were described as rubber hoses. And in a jurisdiction like Malaysia that exports rubber, that gets a big hit in terms of import duties. So if it's described as a function, hose for a particular mechanical function, you may be able to reclassify the tariff codes. So that's one of the things that tends to arise. Description of goods again affects issues about fitness for purpose, merchantable quality, especially for first-time dealings. So that's something I would always say, look out for that. And in terms of physical delivery of goods, where there are large quantities, it'll involve marine transportation. So in terms of carriage of goods, the description of the delivery terms, CIF, carriage insurance freight, free on board, delivery duty paid. Those are short-term classifications that can become quite material in terms of the cost. So I'm basically emphasizing very hard on the issue of cost, because ultimately logistics is something we tend to underrate, but it can come back to bite us in the form of additional cost for freight. Yeah, and I would emphasize also in terms of logistics, even for exporters, one should be familiar with the importer's logistics infrastructure, because if a ship arrives dockside and it is not properly documented, the forwarding agent's quality may be below par. It may result in delays, and demurrage, warehousing costs can be a major factor again. So that will affect the free flow of the goods.
Thanks very much for that, CT. You've actually gave some very good, useful examples there already too. So which is incredible. I guess what I wanted to just pick up on in terms of foreign businesses that may be seeking to enter Malaysia, are there kind of issues that they seem to take for granted when forming partnerships?
I think knowing your partner is absolutely crucial. I mean, that's basic. So it is always good. I've recently had a client that was really fretting over the fact that because of the lockdowns, travel restrictions, there was a fantastic opportunity in a different country, and as it so happens, the pandemic struck, and time is of the essence, and they were really fretting about the risk involved of not being able to do a due diligence on the new partner. So knowing your partner is absolutely crucial. Of course, there are digital ways of verifying, but you always want to make sure that the sources of information digitally is credible. But nothing beats being able to be having boots on the ground to really suss out, new partners. Nothing substitutes that. The other thing is, of course, the understanding the tax and investment incentives that are available in each jurisdiction. I think that also helps a lot to gain some advantage. So short of meeting up with, in addition, I would say, to meeting up with the investment authorities in each jurisdiction, it's also good to tap up professionals in various jurisdictions. Yeah. Yeah, sorry.
Sorry, no, I was just going to, I guess, push that question a little bit more. I guess in one sense, you're highlighting that it is useful for people to actually go and visit the country and actually spend some time there, not just knowing the potential partner. I guess I just wanted also just to get, are there any cultural elements that perhaps should also be considered and the overall business structure? So for foreign companies who might be seeking to establish operations there, or even to just trade with that, same with Malaysia, is it worthwhile for them to spend some time in the country and build those relationships and really understand the culture?
Well, we're a bit lucky in Malaysia. Well, lucky in a way, because we're extremely familiar with the modern ways of doing business. We were, part of the British Empire, so I think a lot of the cultural sensitivities are trivialized or lessened, because a lot of Malaysians understand how, for instance, Western countries operate. like when you meet an American, you really got to squeeze their hands because handshake is everything to them, for example. And of course, for Westerners, most of the time they wonder about the limp handshake, which in Asian cultures, I mean, handshake is not important. And eye contact is also not a major thing, So what is important then would be to have a sense, having a meal together at the get-go gives you a really good idea of the measure of the partner that you're dealing with, and whether the chemistry is good. I think one tends to underrate the importance of personal rapport. So I think if it's an ongoing relationship, not a once-off trading transaction, it'll be a good idea to have constant contacts. If not in person, then certainly video calls.
Thanks, CT. Those are really very practical insights. Thank you very much. Alan, I understand, sorry, this is Alan Fung. Question to you is, Finkey is a fintech which provides financial products and services, which you've covered already. But since you also help businesses find partners in overseas markets, I wanted to effectively follow the discussion here with CT. Is that could you outline the process that you actually take in terms of assessing clients' needs and which partner or buyer to identify on their behalf?
For sure, I know. Just want to echo what CT mentioned, the FOB and the CIF. I've got a case with a importer right here in Australia, and that actually makes huge difference in their profitability. Alongside with those exchange rates happening right now, those fluctuations really could be a deal breaker for these guys. And then rapport, totally, physical meeting, building the rapport, the trust, I think is crucial. Next best thing will be a video call like this. Never just voice or email because there's so much, misinformation out there. Going back to Anna, what you mentioned, we do have an approach when we are dealing with the cross-border opportunities. It's a 7-step approach that we usually use for our clients, but every client is different. So we will slice and dice whichever that fits the needs of our clients. Typically, the first step is actually to define the objectives and the vision of our client. What are their goals? What are the timelines? And what are the roadmaps that they have for that particular country? And that is sometimes very, very important because some of our clients will just have an idea and say, hey, I want to go to sell our product in Indonesia. Why? So we ask those questions to help them define what is the vision and why, and what's the timeline. And then the second step we do is to run a market analysis. You might think that the product is great. Maybe it is for your domestic economy, but over there, it's not needed. So we actually run market analysis to look at the market sizing, the segmentation, the trends for that local economy to see, is there a fit for your product? The next step is actually to find, so in the market analysis, we actually build a market landscape, an ecosystem to say, where would you fit in with your product and services? And then the next step is to find the partners and customers, which I'll come back to. The fourth step is actually defining that market entry strategy. What is our customer acquisition plan? What's our partnership plan? How is the channel commission, etc., reseller agreement look like? What is the market acceptance rate for this referral agreements, etc.? The fifth one is location selection for the operation. Because the city mentioned that before, tax benefits, right? Some countries like China, for example, there's always new free trade zone, free trade ports, and new policies that will come out. Is it better for us to set up operation in Shenzhen or Shanghai or Hainan depending on what your business is. If it's cosmetics, it's a lot of import exportation. But if it's fintech, maybe it's Shanghai or Shenzhen, where you can find access to talents and government support, etc. Or you find a second tier market where you could be the bigger player in that market and slowly go to the country level. And then we do investment feasibility as well. How much should we be investing in this new market? When do you need to reconsider that the approach? And we run financial modeling, forecasting, and valuation for those companies. And the last one, in some instances where our client says, look, we are not sure. We'd like to enter this country. We'd like to start doing business there. But can you find someone to run the business for us? So sometimes we actually find a local companies to actually operate the business for agreed time frame. So it's like a BOT model: build, operate, and transfer. So we build it, we operate it, and then when you're comfortable, we transfer it back to your ownership. So that's a 7-step approach that we usually use. And sometimes clients will come in and say, look, well, we know our vision. We've done the market analysis. Just find the partners for us. So we'll just take that out and say, okay, we'll find the partners. And in terms of finding the partners, sometimes those are partners that they're looking for funding partners, looking for a network or contacts, or payment partners, or knowledge partner, giving them insights or information, or innovation partners. So depending on what they're looking for, we will do the homework for the client. We do research offline and online. So for offline research, we'll talk to people, our colleagues, our business partner, our service providers, sometimes family and friends. One of my business partners actually came from my sister, who introduced me to this family office, and now we became partners. And because that's very important to get the people that you trust to make that introduction to you. The trust element in terms of the partnership is crucial. Without the trust, you can't build a relationship, you can't build a rapport. And to have the trust, the best way is to have someone that you would trust and make that introduction to you. And I think the other one is the language, where Thye mentioned. Yes, English is not the main language. When you do the research in China, you can't just do English research. You go to the Baidu, the local search engine. You don't type English to search up information. So you have to use the local language to be able to find the information that you need. Obviously, Japan and Thailand and other countries will need to have the local language to understand the local market landscape. So finding those partners, when we do our competitive analysis, we look at who are the top 3 or 5 players out there. What kind of infrastructure do they have? Who are the clients? Who are the partners? And sometimes we even look at the staff. If that economy will use LinkedIn, we actually go onto the website, go on LinkedIn and find this. Is there a partnership person in the organization that we can talk to? And then we may be jumping onto the social media and have a chat with these people to explore collaboration. The other thing is also looking into the partners. Do they actually have the license to operate the business? In Australia, for example, you do a financial services. You have to look at, does this company have ACL, Australian Credit License, or AFSL, Australian Financial Services License? Because this is very important. And the type of license that they have, is it just an ACL or is it a credit representative? So that is something that we'll have to look at the legal side, and will be very important to have a lawyer that you can engage, and also to understand those partners. The other thing about finding partners also, networking events or events like this will be perfect. I think I've got a few people I want to reach out to already in this panel, and that's a perfect place to look at potential partners, but also your competitors and organization in similar business that you might seemingly to be a competitor, but there's actually a collaboration. So have the open dialogue with them. The other thing is also because of COVID, there's a lot of associations that are open for membership, virtual membership. Where I am with Fish Burners, the largest startup hub in Australia, they offer virtual membership. And when you go into this association, you get in a lot of companies and business that are very willing to help out each other. And then the last thing will be like government support. Export Council of Australia, APEC Association, Chamber of Commerce will be good places to talk to and get some insights about the market.
Thank you so much for that. That was actually very comprehensive and very structured points, so very useful. I might have to circle back to you in the context of our discussion later on fintech. Thank you. XK from Standard Chartered. My question is what to you is what might be the current factors influencing demand or availability of trade finance for SMEs? For example, are high interest rates or cost of capital a major issue? Is there uncertainty or risk associated with the current global economic conditions?
Yeah, definitely, right. I think post-pandemic supply chain, economic and geopolitical risk continues to be the top of the mind of a lot of companies. I think together with the recent commodity super cycle, the rising freight costs, I think which Thye has previously mentioned, are causing some sorts of structural shift in terms of supply chain partners and also the participants. Most of them are looking to rebalance their priorities. Typically, they are moving from a just-in-time model to a just-in-case approach, i.e. trying to build buffer for rainy days. How do they diversify their suppliers and their counterparties beyond a single geography or even a concentrated set of suppliers, right? So a lot of the factors now do influence, I would say, demand and the availability of trade finance to SMEs, right? Because these are how they are being assessed by banks on top of their credit to also see how much we could, extend credit to the players in the market. So what Standard Chartered actually identify 4 key elements that determine resilience in terms of their supply chain includes being environmentally sound, definitely transparent supply chain, financial robustness to support the smaller suppliers, and even flexibility and responsiveness to changes in the market, right? Definitely collaborative communication across participants. I think there were multiple points that were being brought up, i.e. knowing your counterparties, people that you trade with, being transparent in one another. The pandemic has only allowed us to meet via virtually and not face-to-face in person. Sometimes I do feel that meeting the folks in person, you are able to connect more and also get a feel of the counterparties that you are dealing with. So I think in this current situation, while the region corporates do face more on assessing their direct supplier relationship than the indirect one, sometimes when all the factors combined together, the indirect suppliers or their relationship of their trade ecosystem do recognize the need for greater diversification and greater transparency to strive for their more sustainable goals in the future, and to also reduce the risk associated with the current global economic conditions.
Actually, you mentioned some of the focus in terms of environmental sustainability. Are there actual financial products that I guess where the banks might actually provide concessional financing or loans if a company is actually doing more in that space?
Yes, definitely. I think the banks do have some sort of sustainable trade finance proposition that is designed to help companies to implement more sustainable practices across their ecosystems and to build a more resilient supply chain, right? The typical 4 main trade finance proposition that allow banks to support is, i.e. sustainable goods, sustainable suppliers, sustainable end-use goods, and also transition industries, i.e. also helping industries to transition to reduce their carbon footprint by offering trade financing facilities that recognize efforts for companies to help to reduce emission. And also from corporate treasury perspective, right? Treasurers can actually influence the decision when it comes to sustainable sourcing. They can locate factories or office that can be powered by, a more sustainable energy, i.e. solar. And also there are a lot of banks, including Standard Chartered, that we do look at pricing the loans for trade financing in a more competitive manner. It can be deemed sustainable in our own sets of data and our own sets of certification that the bank complies with the certification boards. Yeah.
Okay, that's a very practical advice in the context of maybe getting the perspective of views of your treasury person within the organization. I guess for the smaller SME, the smaller potential exporters, for example, what should they actually consider before applying to a bank for some kind of financing to grow or to export?
Okay, I guess definitely credit financial status is a key thing that banks usually look into. One of the key things that usually the banks or even Standard Chartered look at is number one, audited financials, whether you can give clear indications of the company's performance, including the ability and the willingness to repay debts. That is, I think, the basic and the typical way of looking at the traditional financing when it comes to bank. And of course, I think SMEs could consider partnering with, fintechs or even digital companies, right? Because I guess digital plays an important role in the current world in enhancing transparency and accountability to drive greater adoption. So leveraging on technology, digitalization to look at a holistic approach on working capital management could definitely help the SMEs to improve their cash conversion cycle, and also help banks to probably have a better transparency when it comes to financing the smaller players in the market.
That's excellent. XK, you actually touched on a very salient point of interest, I think, for many officials trying to encourage SMEs to digitalize. And you also just raised a very interesting point there, which almost suggests that the banks are potentially able to work closely with fintechs and not necessarily to see them as competitors.
Yes, we do. We do encourage partnerships, definitely, because in the current world, I think collaboration beyond treasury, looking at account payables or even receivables on the broader finance tax department from a bank's perspective, we try to look end to end. While we also want to harness the digitalization that enhance visibility to our clients' working capital strategies. At the same time, we also look into companies to build their own governance framework and controls, right? While we can rely on digital, but there must be some sort of governance framework and controls in place for all this digitalization to work. Yeah.
Okay, thank you for that, XK. I might just quickly go to Peter Smith, because Peter, I think some of your products that you alluded to earlier in your opening statement, I think touches on some of these environmental sustainability elements. So I just wondered if you could kind of talk a little bit more about some of these that you are encouraging, especially indigenous businesses, to take up.
Yeah, sure. I think we go back to our word core and understanding where indigenous businesses have a place in these economies. I've been hearing a lot about digital and fintech and tech in general, I guess. And what we're looking at, what we're finding, demographic is important. I think the gentleman from Bitkub, Topp, said, in regards to age demographic, and we, I guess, having a hybrid, because we know that there's groups like Standard Chartered, the big corporations and the institutions who are wanting to partner with our groups. We do take sustainability to the marketplace. That's what we want to do, but we do it, and we understand that economics is important, and but also to sustainability and working on that greener future, and how business and sustainability can work very well together, and then overlaying that with tech. it's important. We're moving into that. So when I go back to the demographic, I say, you know, in the Indigenous Australian space, where we're 15, between the ages of 15 and 30, it's nearly 70% of the population. So there's a big, you know, a young population there that has totally different thinking to say their elders in the past 15, 20 years. So, you know, they're thinking globally. They're thinking already, well, how do we make connection, have government as just purely to initiate that compliance framework, but being able to tap into the different areas and the different economies, and then building that SME space. So yeah, with us, as I said, sustainability is a key important part. It's monetizing sustainability, because we have to think about that. We can't, you know, yes, it's nice to be able to, you know, we've got to work on both sides. We've got to be able to reduce the emissions, but at the same time, how do we then reward or remunerate these groups that are offering things around the carbon trading space as well. We're looking at, we've now bought a business, or we've had a merger, but we've now taken on a big part of it, which is in the vertical farming space. That's a huge area. It's sustainable farming. It just plays perfectly into our strategy as a small to medium-sized business enterprise that we're out there. And we're now working on ESG, which is a huge thing, obviously, as we know, worldwide, globally. But we've got an ESG Impact, who's our partner as well. They're on partners with us at Burra. And they've now built an ESG trading, if you like, platform. And it's been, you know, 2.5, 3 years in the making. But they've done a lot of work around that. And so they're a big player, if you like, in the ESG space, but still a small to medium company. And, you know, again, we see that it's partnerships as well. So we are services, but our products, if you like, Arnold, I like to refer them as products and services. You know, we're about partnership. And I think it even goes back to Choo, who was explaining in regards to relationship building. And that's a key thing. And I mean, that's my role really with Burra, is about relationship building and having those partnerships there for the services that we take to these economies.
Yeah, so Peter, I guess in the context of some of these, I guess, products or services where you try to encourage, say, Indigenous organizations, and then I think you touched on something like tree farming or something. Do you actually encourage them to maybe undertake those kind of activities so that they could, I don't know what the terminology is, offset or gain some kind of carbon credits to somehow monetize that? Is that right?
Correct. And that then builds in their self-sufficient economy. Every nation, so within the Indigenous Australian economies, if you like, or there's a number of different nations, and as we all know, Australia is a very diverse country geographically. You know, from northwest to southeast, you know, totally different. But yes, so we go on we call it a project basis, and each Aboriginal group or stakeholder group has different needs, different wants, and I guess the key thing is for a lot of these groups, and we've done a lot of research in the last 3.5 years to understand what is, I mean, probably longer than 3.5 years, but, you know, really intensely for the last 3.5 years, what is it that each group wants? And you can go, like I said, you can go from 50 kilometers geographically, you know, apart, and their thinking is totally different. So yes, around the tree, like afforestation, and it's understanding the methodologies around these carbon credits. And so there's afforestation, reforestation, and then from there, it's how is the community involved? And again, yes, it is to monetize. These groups are wanting to come. They say, look, we want to be an economy, a self-sufficient economy. How do we do that? Well, we have this land. How do we work with this land and then allow it to be monetized? And there is a number of groups internationally from different economies, big institutions who are wanting and very interested in working with Indigenous Australia. We then now are but we are now opening up the doors to other Indigenous groups across the world, and that's slowly. And it's great because we slowly have a forum where we're talking about this, and it's amazing what you hear from other groups who are going, "Look, we've thought about this some time ago, but have never really implemented or started the process to implement." So yeah, and it's, look, I said, we've got one group that's really, really focused. They've done a lot of planning, afforestation out of the St. George's Basin, which is basically across the New South Wales, Queensland border, if you think of it. If anyone can remember the map of Australia, but yeah, and it's amazing what they've got. It's afforestation, meaning it's from scratch. They've got land that's never had trees, but they've got amazing underwater, water underground tables and things like that. So yeah, they've, you know, and they've worked on how do we then fund this, and again, it's all about partnership for them as well. You know, so yeah.
Thanks, Peter. It's good to hear that there are new products and services being made available and reachable for the smaller and I guess disadvantaged groups as well. Thanks for that. Stu from Paytron. Paytron has actually entered a very competitive industry with other fintechs offering, I guess, similar services. Do you consider that there is enough demand in the market to sustain the current industry structure? And where do you expect future demand will come from, and what might be the drivers?
Yeah, thanks, Alan. Yeah, look, I do think that, yes, there are a lot of fintechs around, and many of them are absolutely offering services based on a theme. However, I think that the phrase and the word fintech is probably, in my view, it's probably starting to outlive its descriptiveness, if that makes sense. There's a lot of fintechs out there. Some of them are global organizations already at a high level of maturity. A lot of fintechs are going through the growth stage, through the unicorn period, etc. And arguably they lose the impetus to innovate because that's what's made them successful in the first place. In terms of the innovators, I think there is a serious amount of opportunity out there, and I think it needs to be more focused. I think there's a lot of organizations out there who are driving forward with very, very exciting ideas, but sometimes they struggle to bring those to the optimum position in the market that they're looking at. And I think a lot of competition is driven through an inability to collaborate and understand and get help in actually positioning those services and products with the market that they're looking for. And obviously, you know, there's a lot of challenges out there, changing supply chain dynamics and digital first approach, inconsistent global regulatory structures, and obviously changing financial risks all the time. And that's very difficult for any smaller incumbent to the market to really navigate through and concentrate on their products. Because I mean, I think we've got to see as well that, you know, a lot of fintechs and a lot of innovators are SMEs as well. So they're going through exactly the same challenges as the people that they're trying to service and the people that they're trying to help. So again, there's a whole landscape out there with a mix of different organizations, all of which can play a part in building out the value chain across a broad landscape, if that makes sense. And I think, you know, there's opportunities to partner with each other and really build on the development that they're all going through in the different life stages of their organizations. But also we're seeing a lot more opportunity, and I think that was mentioned a little earlier, with the banks. You know, we as a fintech and a payments related fintech are not going to look at the banks and say we don't need banks anymore. We absolutely need banks. The world needs banks. Are there positions we can fit into that complement and potentially allow those banks to concentrate on very high quality servicing, while we can actually innovate around those to help things like open banking come to market? So, you know, we're now seeing the banks come to the fintechs and the fintechs come to the banks and actually agree that, yeah, we're not actually necessarily in competition. Sometimes we are, and it's healthy competition, but I do believe that there are very and more increasing complementary positions within the market that we can all fill. Often a fintech will bring benefit from developing and launching a specific product or idea, which they will need to work out how best to deliver to their target market. And that can add cost and erode value over time. So these partnerships, I think, they can help cost effectively bring these products to life across multiple landscapes and at various points in the value chain. And that's really how Paytron seeks to offer value. We provide an array of services through our platform, but we don't build our own payment rails or accounting platforms. We recognize that there are others out there who can do that better than us. So we seek to partner with those and bring a best of breed environment and ecosystem to our customers and really, hopefully bring broader benefits to the landscape.
Stu, I just wanted to ask you a couple more questions in the context of, I guess in one sense, you've been quite successful as a services firm and now looking to be able to establish operations in foreign markets. I want to get a sense in terms of what tips would you share with others? Like I said, especially for services businesses looking to expand overseas.
Yeah, it's a good question, and I think some of these things have been touched on previously, and in huge agreement with everything that's been said. But from our perspective and our experience, really, obviously, market research, ensuring that we fit and our products fit the market and the culture that we're seeking entry into, and I think. Again, I think that was touched on earlier, that culture is as important as the product you're trying to get into that market. Who are the competitors? Who are the incumbents still there or there that you're trying to take on? How ingrained are they? What is your point of difference to actually make people sit up and notice you? And I think the costs of entry, any licensing lead times, are you expecting to get into a market and make revenue straight away? Have you really understood the time that it takes to get to market and get the return on the investment? Again, for the environment that you're moving into, what localization will need to be considered, marketing language, sales approaches, customer support, all of those things need to be considered. Not as a one size fits all. Everybody's got different expectations in terms of how you can generate a smooth execution in that marketplace. The one thing, or one of the things that has really helped us is seeking out and gaining support. Particularly, I think I mentioned earlier around the support that we've received from Austrade in Australia and ASIC and the FCA in managing our expectations and allowing us to develop our roadmap accordingly, and also get advice from those guys and also any other incumbents in the market that you can actually generate relationships and partnerships with, to the previous point, that can really help you navigate your way into the market. One of the other things that perhaps, and I understand a number of companies have done, I do sit on a couple of advisory boards as well, and I know this is a challenge that at least one of those organizations have had. It's making sure you don't lose momentum in your home market or your originating market through diverting resources before you've got them stabilized or backfilled. There can be a tendency to leverage off the success of a product or success of a launch in one country and go to another country and then lose momentum in the country that you started off in, and therefore you then have to backtrack. So that's quite an inhibitor, clearly. And make sure you've got a good infrastructure. Invest in the technology and resources that will support expansion to foreign markets. It's important to have a globally agile technology stack, I think, which allows us to keep things simple and make sure that as we grow in the various markets, there isn't a divergence and then a need to manage legacy components over that time. And then finally, for me, really, as Chief Risk Officer, I'd be remiss of me not to mention some risks on that side, but plan for success, but also work out what can happen to negatively impact your business, particularly in the early days, and plan for all those risks to occur. Yes, develop a risk management plan that really takes into consideration the worst case scenarios, and drink from your half full glass, but don't take your eyes off the half empty one.
Great, thanks, Stu. Topp from Bitkub. It is a privilege to have you join us. It's a rare thing to be a unicorn. Why do you think fintechs are important to economic growth and performance? And I guess how can they actually assist in lowering the cost of doing business, especially for SMEs? I know you have touched on a number of these points already earlier, but hoping you can expand on some of them.
Sure, thank you, Arno. You know, there's one of the biggest misconceptions about blockchain and digital assets is that people thought that digital asset is just another asset class. I guess the best way to explain this is to look back on the internet space, right? When the internet first arrived, people thought that, you know, internet is just another communication channel. We have TV as one channel, we have radio as another channel, we have traditional telegram, post office as another channel, and internet, oh, it's just another communication channel. But we were wrong. Internet is all communication channels, right? We have digital TV, we have digital radio, we have digital podcast. Internet is all channels, right? That's the biggest mistake that we did 20 years ago. And, you know, once we have this platform business, it's a new business model, platform business, ecosystem business, or the operating system. We never talked about this sort of business models in the past. And when the social media platform, right, arrived, like for example, Facebook, it becomes all channels. We can, you know, communicate on Facebook. We can advertise on Facebook, right? We can watch TV on Facebook. We can listen to podcasts, radio on Facebook. It becomes all communication channels after we have this platform business. Fast forward 20 years to today. If you look at the financial, you know, space, or the way we exchange value, right? We have finished, you know, changed the way we share information in the past 20 years, right? If you look at the way we share value today, right? People thought that digital asset is just another asset class. We have, you know, bonds as one asset class. We have equity as one asset class. We have gold as one asset class. Oh, digital asset is just another asset class. And again, I think, you know, this is the biggest misconception. We are wrong again, right? Digital assets will become all asset classes. You know, anything that, you know, the market thesis is this: anything that can be tokenized will be tokenized in the future. Meaning that we can even tokenize bonds, right? We can tokenize equity. We can tokenize carbon credit. We can tokenize electricity into digital tokens, right? And we can allow free flow, you know, to the way we exchange value freely, instantly, globally, in a frictionless manner, in the same manner that we're sending information right now. So what we are trying to do here, you know, Bitkub, is to create, you know, a social media of value, right? The platform business. If you look at the traditional, you know, financial space, to send money, you have to use Western Union, one channel, right? Similar to we were using radio in the past, just one particular service, right? And if we want to get loans, we have to use, you know, a bank. That's another channel. If we want to fundraise, you know, stock exchange of Thailand, that's another channel, right? And what we are trying to do to create is the digital infrastructure for the future. We are already becoming the country's critical infrastructure. We have 4 million customers base now in Thailand, right? And last year, our net profit already exceeded, you know, the Thai stock exchange, you know. So we already become a new digital infrastructure for the country. And what we're trying to do is to create a digital platform where in this digital asset exchange platform, we can, in the future, right, be trading FX. Instead of using, in Thailand, we have this super rich, a bricks and mortar money exchange booth, right? And the spread is huge, it's large, because you're trading against the middleman. right? And the liquidity is not great. Once we can tokenize FX, we're creating a trading platform for FX, right? That's one channel in this platform. We can even tokenize carbon credit trading for the greener region, right? For all the SMEs. We can even trade electricity, units across different households with this one same platform. We can do money, remittance overseas in a frictionless, instant manner by using digital asset as a transactional protocols. We can even give out loans via smart contracts, instant, we can do a predetermined condition. For example, if another COVID strike us, we can say, okay, employees that got fired that are 50 years old in the tourism, hotel space, whatever gender, predetermined condition, and the money would release right away, to increase the velocity of value. So what we are trying to do is to create the infrastructure for the future, right? Even currency, we are talking about CBDCs right now. I just came back from Davos this year, and most of the sessions there, they are talking about CBDCs, central bank digital currencies, right? In Thailand, we're testing as we speak, digital baht, and we cannot have, central bank digital currency on traditional platform like financial institutions, because they were built based on the belief that money is paper-based. They need money counting machines. They need armor trucks to move money around. They need ATMs, old infrastructure. We're creating the new infrastructure for the new format of money, right? So what we believe is that, anything that can be tokenized will be tokenized, and we're creating the infrastructure for the future. And of course, SMEs benefit because we're removing redundancy, inefficiencies for the SMEs. Money would arrive right away for remittance, better exchange rate for the FX with much higher liquidity when they're trading on the order books instead of against the middleman, right? Get access to carbon credit right away, electricity units. We're removing redundancy, deadweight loss in the ecosystem. Thank you.
Thank you, Topp. Look, we're really very keen to explore more about what we, as in both government and the private sector, can actually do together to advance your vision, which is quite extraordinary and quite energizing in one sense. But I have to say that is all we actually have time for today. There was actually a lot of food for thought there, and so very much appreciated it. And a big hand of applause to all of our panelists today, and to all of the others who have actually listened in today's discussion. Thank you for attending. We hope everyone can join us next time for the next the fourth and final session of the initiative fostering greater SME participation in global value chains for this year. Again, we very much like to say thank you to the sponsors of this initiative, the Australian Department of Foreign Affairs and Trade in particular, as well as the co-sponsors. I guess I have to leave it there. We're 1 minute over time, but Angela, over to you.
Thanks, Arnold. And yeah, I'd just like to echo that we are very, very grateful for all of the excellent insights from our expert panelists today. And thank you to all of the participants who joined us online. We really appreciate your engagement in this discussion, and we encourage you to connect with others in this forum. We really do want to see new collaborations and partnerships come out of this, as was alluded to, I think, by Alan. And we've been so privileged to hear practical and useful information today. The elements of doing international trade, finding the right partner, cross-cultural considerations, and the whole ecosystem of international trade, looking at this in a new light as we shift to an increasingly digital future. And also the way that business and sustainability can work together, as Peter mentioned, and how this can be remunerated. We look forward to seeing you for the final installment of this particular initiative, and that will be at the end of October. So we'll be in touch again. Thank you once again to everyone for being involved today.
Thanks, everyone. Have a good day.
Thank you.
Thank you.